the story for equities and for tech stocks more specifically, the FANGs, if you just looked at some of the newscasts around some of these companies, I think you might have missed that they're up over 10% on the year. Right. So what's happening with the narrative on tech versus the actual price action around tech?
So the narrative is very confusing. I mean, there's clearly issues that invite regulatory scrutiny, and that clearly is an overhang on the space because you don't want the government getting involved. That clearly would diminish growth and profitability. On the other hand, the underlying businesses, especially if you're cloud and service related, is tremendously strong. The earnings continue to power through. You're disintermediating traditional, well-established ways of doing business, and that growth profile continues to accelerate even after a strong base. And so that's what investors are paying for.
So do you have to sort of discriminate within tech itself and think about that ad model, the Facebooks alike, that could be challenged, and then look at the consumer discretionary companies like the Netflix of this world, which year to date is up 74% so far? Is that the distinction you need to draw within tech?
I think it's clearly the line you need to make. Those businesses that revolve around subscription models, whether it's Adobe or whether it's Netflix, are clearly a stronger base model, right? But those businesses that revolve around ad spending and targeting on people and have questions with respect to your invasion of privacy and what information is out there and aren't, are going to invite regulatory scrutiny and consumer backlash.
Anastasia?
I think it's a really important theme that you're bringing up of sort of this rotation that is taking place in tech away from some of those consumer companies to more enterprise-based companies. And I think one of the under-the-radar stories perhaps for the year is that those enterprise software companies are doing exceptionally well. And we talked about the CapEx picking up. Well, it's not just the tangible CapEx. More and more of the CapEx dollars are going towards intangible CapEx and the software spend. So I think for the first time in a number of years, companies are ripping off the Band-Aid, is saying we are going to upgrade our systems, and they're not buying tangible stuff. They're buying those software programs that you had mentioned.
Are you seeing signs of that happening yet, Anastasia, or have we got to wait? How patient do you need to be?
We absolutely do see signs of that happening. First of all, you're seeing that in market performance of some of the software names, but you also are seeing that in their earnings as well. If you look at the tech sector, for a while there was the semiconductors that really led the earnings growth, up 30–40%. Well, this quarter we're actually looking for the software piece of the tech puzzle to lead the way on earnings.